Good morning, guys. Today is Thursday, 21st May 2022, 2026, sorry. And this is what we were looking at yesterday. This is what we were looking. This is the analysis we had yesterday. We were looking for potential buys above this area, this level here. These were the safe buys. Remember, we had some aggressive buys here. For whoever took the aggressive buy here, there were some aggressive buys over here. Whoever took the aggressive buy here, if I had taken this trade here, my entry would have been here for the aggressive buy, my stop loss just below here, and it would have pushed the market all the way to TP3. But remember, I said this was very high risk because the market could just weak over here, then push all the way down. It would then that would have been a loss. But it played out well. If you took the entry here, if you took the buy here, you'd have pushed the market all the way up to TP3, 3, and some levels all above here. So for the safe buys, we were looking for buys above here, above this level here. Uh, I didn't get an entry here because when this candle closed above our level here, you see this candle, the candle didn't close with good momentum. It didn't give me the confidence I needed to take the trade, so I didn't get an entry here because the candle just closed slightly above our level here. The next candle opened here, pushed down a bit. It didn't even retest our level. You see, it didn't hit our level here. It didn't retest our level, so I didn't get an entry there. Then this happened. This candle opened here. This was around 5 p.m. This was I think this was the pre FOMC jitters. The nervousness in the market could have caused this. And after this candle closed above our level, you can see this candle closed with good momentum. This is where I was waiting to take my entry here. This is where I placed my buy limit here, hoping for the market to come retest this level, activate my buy limit, and push the market up. But we never got activated. So yesterday, I missed all of this move. We missed it. Okay. So for the sales, we are looking for potential sales below here. We were looking for potential sales. You see, my alert was never hit. It was the alert I had set. We were looking for potential sales below this level here. For the potential sales, we never got any signal for the sell, and that was how the market played out yesterday. My buy limit after this candle never hit, so we missed this move. But still, we preserved our capital to fight another day. So let's see what we have today. What do you expect on the news today? Let's see the latest development, the fundamentals, Fed interest rate hike chances grow, minutes from Powell's last meeting. Yesterday was Powell's last meeting. The Federal Reserve official showed growing support at the April meeting for um, okay, this is the latest developments. Uh, Trump, let's see what Trump had to say about Iran. We are dealing with reasonable people. We'll wait for Iran response for a few days. Okay. So these are the latest developments. This is where I get the fundamental news from. Okay. So let's look at the calendar today. Let's see what to expect. What to expect today. Today being a Thursday. Anything high impact on the USD? Nothing. Here we have on the Australian dollar, we have employment change and employment rate on the AUD, Australian dollar. On the GBP, we have nothing here. On the USD, you have nothing. You have something on the GBP at 6 p.m. The BOE Governor Bailey speaks. So nothing high impact on the USD today. We have some low impact news, unemployment claims, flash manufacturing PMI, flash service PMI, although these are low impact data. Anything in red, high impact. Anything in, which color is this? Brown. Not very high impact. Then you see, low impact, medium impact. Okay, so we have nothing high impact on the USD today, unless Trump or Iran uh, issues, unless they issue a statement declare that could declare some changes in the latest development in the war. Okay, so that's what to expect today. So real quick, let's jump into our analysis for the day. Remember, we are still on nine executed trades, 3 lost, 6 won. So let's see what we have today. Yesterday missed the entry. We didn't get an entry today. The market didn't give us an entry yesterday. So let's see today real quick. Our resistance up there, support down here. That's on the monthly. Nothing has changed. On the weekly, support is down here. Is the lowest the market came and pushed up. Then we have an internal resistance up there, and then still be wary of this. This resistance is a weekly resistance. The market came pushed down all the way here. Is the swing high, swing low for the monthly. Okay, for the weekly, swing high, swing low. Then you have this internal resistance here. For the daily, let's jump down to the daily, see what we have. On the daily, we have this break of structure here, though it's in the market came down, came here, pushed up. We had that break of structure to the upside and came pushed down. So our high is here, came pushed down. Our low is here. So these are resistance here, the daily. Then you have this internal. We have an internal. These are support here. Then you have an internal resistance here. And this one, the swing resistance, the swing high on the daily. Okay. So jump down to 4 hours. Let's see what we have on 4 hours. On 4 hours, the structure is broken here. So the swing high is there, swing low is down here. So that's what we have on the 4 hours. So here, allow me to move it to the body here, the body there, and here we move it to the body there. So this is the range where we are working with on the 4 hours. This is the 4-hour range we are working with here. So on the 1 hour, let's see what we have. On the 1 hour, market came pushed up to here. It was broken here. We had a break there. So on the 1 hour, our low is here and the high is there. Okay, so this is the range we are working within on the 1 hour, because the market came, broke this level here. There was a break of structure here, pushed all the way up here and pushed back. There was a pullback. This was an impulse, a correction, then an impulse all the way up here. So this is our low, this is our high. So we are working within this range here. So that's basically what support and resistance is. So on the 30 minutes, let's see what we have. On the 30 minutes is the 8 a.m. candle. We had this resistance here in the 30 minutes before, yeah, the market came all the way down, pushed up, and broke the structure here. There's a breakout structure here. So on the 30 minutes, we have that support there, and we had this resistance here on the 30 minutes. Okay, that was the resistance of 30 minutes, but it has already been broken. Let's see what we have on 15 minutes. On 15 minutes, we still had the same. Is the 8:15 candle, 8 a.m. candle, 8:15 candle. Okay, so now this is where it gets interesting. So this is what I would do. You want to take this trade here. If I were to take this trade, because this is the 8 a.m. candle, I would be looking to take a trade from right here. I'm gonna remove this one. This one has already been broken. I'll be looking to take a trade from, move this to the body here. Move that one to the body there. If I get a candle closing below this level here, if I get a candle closing with good bearish momentum below this level here, is where I would take a sell from. This will be my potential sell. Potential sells below. Potential sells below. And if I get a candle closing above if I get a candle closing above this wick here, yes, if I get a candle closing above that wick here, that wick there, okay. There is 540.28. So if I get a candle closing above that wick, this wick here, this would be my potential buy. Potential that would be my potential buys above, potential sells below, potential buys above. Okay, so that's this is where we are looking to take our trades from. For the buys, if we get a buy, this will be my first take profit here. Then we push the market up to here. For the sell, if I get a sell below here, I'll push the market down to this levels here. This level here. That level there. Let's look at the 4 hours. So the 4 hours swing high, swing low. Yeah, that's what we'll be looking at today. We decide to take the market up. The levels I'll be watching here. If we decide to take the market down, then I'll be watching this level here. So this is what we have. Remember my risk to reward ratio. I aim for a risk to reward ratio of 2 plus 2. So if I were to take the market there, stop loss just above there, is a buy. If I take the market from there, stop loss there, just a reward ratio of 2. So that's what I'd be looking at for the buys. For the sells, I'll be looking to take the market from here. Short position. I'll be looking to take the market from there. Stop loss. Stop loss there. Push the market to this level here. But if we have some good bearish momentum, I'll push it to there. So remember guys, trade what you see, not what you think. Risk management is always key. Here's how to take this trade. If I get a good, if this candle, this active candle, you see, the previous candle, let's see, is the low. The low is 523.175. This one closed at 523.225. See, it didn't close below this level. 225. This one is 175. Didn't close below this level. But if we get this candle, if we get the active candle, this candle closing with good momentum below our level here, with good bearish momentum, then I'll be looking for a retest of this level here to take the market all the way down to these levels here. I'll take my profit somewhere around here. We'll get some good bearish momentum, push it down to this level here. Okay, so this is what we are looking at today. This would serve as my TP1. TP2, TP3. Remember, risk management is key. Risk management is key. Trade what you see, not what you think. TP1 and TP2. So, see you tomorrow, guys, for a recap of this trade. Let's see how it goes. This is what I'm focusing on today. Ciao. I'm out.